How the higher inflation rate has strengthened the yen against other major currencies and what are the implications for Japan's economy and trade. Inflation is the general increase in the prices of goods and services over time. It reduces the purchasing power of money and erodes the value of savings. Inflation can have various causes, such as excess demand, supply shocks, monetary expansion, or exchange rate movements. Japan has been struggling with low inflation or even deflation for decades, due to various factors such as an aging population, a declining labor force, a strong yen, and weak consumer spending. Deflation can have negative effects on the economy, such as discouraging investment, lowering profits, increasing debt burdens, and creating a deflationary spiral. However, in 2023, Japan experienced a sudden surge in inflation, reaching 3.2% in March, the highest level since 1980. This was mainly driven by a sharp rise in food prices, which increased by 7.8% year-on-year in March, as well as by higher costs of furniture, medical care, and clothing. The inflation spike was also partly due to the base effects of comparing with low prices in 2021, when Japan faced deflation at a rate of -0.23% due to the COVID-19 pandemic. One of the consequences of higher inflation in Japan was the appreciation of the yen against other major currencies. The yen is considered a safe haven currency, which means that investors tend to buy it when there is uncertainty or risk in the global markets. Higher inflation in Japan increased the demand for the yen, as investors expected that the Bank of Japan, BOJ, would raise its interest rate to curb inflation and protect the value of money. Higher interest rates make a currency more attractive to investors, as they offer higher returns on deposits and loans. The yen strengthened from 109.5 per US dollar in January 2023 to 103.7 per US dollar in April 2023, a gain of 5.3%. The yen also appreciated against other currencies, such as the euro, the pound sterling, and the Chinese yuan. The stronger yen had mixed implications for Japan's economy and trade. On one hand, it helped to lower the import prices of oil, gas, and other commodities, which reduced the cost of production and consumption for Japanese firms and households. It also increased the purchasing power of Japanese consumers abroad, which boosted their spending on foreign goods and services. On the other hand, it hurt the competitiveness of Japanese exports, which became more expensive for foreign buyers. This reduced the profits and revenues of Japanese exporters, especially those in sectors such as automobiles, electronics, and machinery. It also reduced the value of foreign earnings when converted back into yen. This could have negative effects on Japan's trade balance, which measures the difference between exports and imports. According to the latest data from Japan's Ministry of Finance, Japan's trade surplus narrowed from 1.1 trillion yen in January 2023 to 0.6 trillion yen in March 2023, as exports grew by 9.6% while imports grew by 14.8% year-on-year. The trade surplus with the US also shrank from 0.6 trillion yen to 0.4 trillion yen over the same period, as exports increased by 7.1% while imports increased by 12.9% year-on-year. In conclusion, Japan's higher inflation rate in 2023 has strengthened the yen against other major currencies and had mixed implications for Japan's economy and trade. While it lowered import costs and increased consumer purchasing power abroad, it also hurt export competitiveness and reduced trade surpluses. The BOJ faces a difficult challenge of balancing between controlling inflation and supporting growth.